Good afternoon, everybody. Welcome to this call. I'm Swapna from Investec. Handing over to give a brief introduction about the call and the management to my colleague, Nidesh Jain, who is the analyst BFSI. Thank you, everyone.
Thank you, Swapna. Good afternoon, everyone. Welcome to the Q3 FY26 earnings conference call of Can Fin Homes Ltd, hosted by Investec Capital. We will start the call with management commentary, followed by a Q&A session. To discuss the financial performance of Can Fin Homes and to address your queries, we have with us Mr. Suresh Iyer, MD and CEO, Mr. Vikram Saha, Deputy MD, Mr. Prakash, President, and Mr. Abhishek Mishra, CFO of Can Fin Homes Ltd. I would now like to hand over the call to Mr. Suresh Iyer for his opening comments. Over to you, sir.
Yeah. Good afternoon, and thank you, Swapna and Nidesh, for the introduction. Welcome all of you to this earnings call for Q3 results of Can Fin Homes Ltd. And first of all, a very happy new year to all of you. So just to give a brief about the performance of the company, the disbursements I'll start with the disbursements. So the disbursements in the third quarter have been 2,700 plus crores, which is the highest ever for any quarter in the history of the company. Therefore, in this particular year, in the first quarter also, the 2,000 plus figure was the highest for the first quarter in any of the years. Same way for Q2, we crossed 2,500, which again was a record for any of the quarters. And this the third quarter also, in a similar manner, we have been able to have a disbursement of 2,727 crores. So that is a 45% increase over corresponding quarter of last year. Basically, it's a base effect because in the last year in the third quarter, we had a impact of the e-Khata, which was announced on 28th of September 24. Therefore, the Q3, there was a major dip. So to a large extent, it is also a base that, compared to the Q2 also, we have had a sequential growth of about 7% in disbursements. As a result of this, the AUM growth has inched up from 8.4% to 9.5% plus. So effectively, about 10% kind of a AUM growth is there for the year. And however, the AUM growth has been slightly impacted because of the higher prepayments. In the Q2 also, we had witnessed a slightly higher prepayments of 1661 crore as against 1459 crores in Q1. In Q3 also, this trend has slightly continued, and the prepayments and loan closures have been at a slightly elevated level, 1691 crores. Therefore, this has slightly impacted about 400 odd crores in the second and third quarter we have lost because of prepayments, which has impacted our AUM growth. In terms of the delinquency, for the fourth quarter in a row, we have had an improvement in our delinquency numbers, where in absolute value, the SMA numbers have come down. So last quarter, when we had reported our Q2 earnings numbers, we had indicated our total delinquency was 3,860 crores. We had said we would like to make it to bring it down to below 3,750, which has happened. We've had more than that. In fact, our delinquency numbers have come below that, mainly in the SMA 0. But we've also started seeing some, benefits coming in because of a lower SMA numbers. We have also been able to focus more on SMA 1 and 2, and there also the numbers have started coming down. And though the delinquency has come down and NPA has been almost the same as Q2, but our provision has been about 10 crores for this quarter, mainly because of the increase in our book size. So otherwise, there is no other concern. The highlight here that I want to mention about the recovery is that the last couple of quarters, we have been talking about a little bit of stress in the Telangana portfolio, where because of our actions on the DSAs, some past issues, and also because of the Hydra and all, the delinquencies had been affected. But in Q3, we have seen an improvement in our delinquency in Telangana as well. And there also, for the first time, almost after about 6 to 7 quarters, we have seen that the delinquencies have started coming down. So that's a positive number. That's a positive thing that across our geographies, across our geographies in all of our zones, we are seeing some improvement in our delinquency numbers. In fact, going back to the disbursement number, in fact, our Karnataka disbursements last quarter was negative 10% YTD, which this quarter we have done a run rate of about 250 crores per month in Karnataka, which is, so now we are back to kind of a 250 plus kind of a number. So for the third quarter, we have done 740 crores disbursements, 740 plus crores has happened from Karnataka, because of which now YTD Karnataka has also moved into the positive zone. It is 3% positive YTD. As far as the other zone which was in negative, which is Telangana, there also in fact across, the third quarter, in all the 3 months, we've had a positive number of 100 crore plus. So Telangana compared to Q3 of last year, there has been almost 30% plus growth in Q3 this year, because of which we have been able to considerably bring down the negative figure of Telangana, and at this rate we are quite positive. By end of the year, even Telangana will end in a positive zone in terms of YTD disbursements. Third, as regards the spread, we have had a further advantage which we had in the last earnings call indicated regarding a particular large value loan where the rate benefit of 50 bps was yet to be passed on. We received that, as a result of which we decided to pass on a 10 bps benefit to our existing and new customers, housing loan customers, in December, from 1st of December. But subsequently, 5th of December, again, there was another repo rate cut. So we further analyzed, and from 1st of January, we have decided to pass on a further 15 basis points rate benefit to our existing and new housing loan customers. So with this January impact, our total rate benefit that we have passed on to our customers would be 50 basis points, 10 basis points in May, another 15 in July, then 10 from 1st of December, and 15 from 1st of January. So totally, against the 125 basis points repo rate cut that the RBI has announced, the transmission in our books has been about 50 basis points, and entirely we are passing on to our customers. However, there is a benefit that still continues to accrue to us, because we still have about 54% of our loans which are on annual reset. So while we have announced the rate benefit, the actual pass on will happen to those customers as and when the reset dates come. So as indicated last quarter, where our annual reset was 59%, this time it has come down to 54%. But we have made some aggressive actions and given time for them to of 60 days to submit the documents, and are aggressively following up. So hopefully by end of this quarter Q4, we might end with somewhere around 80-85% of our loans should move to quarterly reset. So this will help us in case of a rate reversal. If the interest rates start moving up, then the transmission on the asset side will also match with the transmission on the increase on the liability side. So that's the plan. We plan to aggressively move it to a quarterly reset. But as I mentioned, because of this slight lag, that we have still experienced a slight increase in our NIM spread. So for the quarter, the NIMs have moved to 4.14 from 4.02 last quarter. Obviously, it is a timing difference, because while we got the rate benefit in end of October, but we decided to give the 10 basis points for 1st of December. So that was a slight benefit that we got. But going forward, now that with the additional 15 basis points, we expect that the rate would spread would kind of stabilize around this number of about 3.75 to 3.80 in terms of NIM, and spread around 2.75 to 2.80. That would be where we should stabilize, because on the liability side, while we have passed on 15 basis on the asset side, on the liability side, we still have to receive some benefit on the NHB portfolio, and we still have an additional 1,000 crore of NHB refinance which we are holding. So this is in terms of the spread and the NIMs. Going forward, in terms of disbursement, we anticipate, or we are hopeful that we should be able to do about 3,200 to 3,300 crores of disbursements in Q4, in line with our H2 numbers, 45% in H1 and 55% in H2. So that should take us to our guidance number of 10,500 crore disbursement for the entire year, which we are positive we should be able to maintain. We will be able to do. In terms of our delinquency, we further expect a little improvement in our SMA1, SMA2 numbers. And obviously, Q4, usually there is a reduction in our NPA also. Last year, it was a little less, but normally in Q4, we do see some good amount of reduction in our NPA. So therefore, in credit cost-wise, we don't expect any further NPA provision in Q4. There is a very likely reversal which might happen because of the reduction in NPA, but definitely no increase in NPA because we don't see that kind of a stress in any of the geographies or in any of the segments. So that's as regards this. The last point is as regards our IT transformation. That is also a major impact. You would have seen from the presentation that during this Q3, we have also added some more elements which we have completed and implemented and which have gone live, mainly the HRMS, the DMS, and the Aadhaar Data Vault. Deposit, which is almost on the verge of completion, the testing is almost, UAT testing is almost done. It is expected that end of this month, it will also go live. So that leaves only the LOS LMS, where the deadline was January, and 19th of January was what has been given by our partner. But there are some delays in the deadline, so I expect that it might end up around February end or something, in which case we are inclined to actually push it into Q1 of next year. So Q4, there will be no impact of the IT transformation, which is why we feel that 3,200, 3,300 crore is a very much achievable number in terms of disbursement. So in a nutshell, I think for the quarter, in terms of disbursement, in terms of delinquency and also spread and this thing, it has been a very satisfying, I would say, quarter. Going forward also, we are positive that we should be able to achieve the guided number of 10,500 crore for disbursement. And Q4, we may expect or we can expect some more improvement in our delinquency. So with the spreads and NI has been maintained, I think Q4 also would be a positive quarter for us. So that's in a nutshell the brief of the performance. We can open to all of you for questions. Thank you.
Thank you. Thank you very much, sir. I would request all the participants to just take a minute before everybody kind of raises their hand. Just a reminder, this call is being recorded, and if any of you have any questions, do raise your virtual hand, and I will unmute you. In the interest of time, I will request everybody to keep your questions limited to 1 or 2 questions, and we'll come back to you in the queue. And also another request is please state your name and the organization that you're working for. Thank you very much. Nidesh, would you like to go ahead with any questions on your side?
Sure. So Sapna, we can start with the Q&A. I think I see questions here. So Shripan, you can go ahead with the question. We will unmute you. Please introduce yourself and ask your question.
Yeah, you can.
Hi, sir. Shripal this side from Equirus. So my question was pertaining to the lending rate. So we've taken another 15 basis point in Jan. So cumulatively, we are at 50 basis points. So are we seeing other peers also in the landscape following a similar trajectory on the lending rate side, or are we early in this because we are seeing some prepayment-related issues?
Sure. Thanks, Shripal. See, basically, we have passed on because, we have experienced that kind of a benefit. I'm not sure how much of a benefit the others have experienced on their liability side. As you know, we have moved all our bank borrowings to repo-linked borrowings. So therefore, in our case, all the loans we have experienced the benefit or a pass-on of the 125 basis points, except for that one which is linked to T-bill. So there also, effectively we have seen. So in our case, of course, there is a bit of a prepayment pressure, but more than that, it is just that, even after passing on 50 basis points, I think our spread, which was around 2.55 at the beginning of the year, has already moved to 2.89 for the 9 months ended December. So in spite of passing on, we have actually had some benefit in the rate. mainly the timing impact. But it's also because, we already have experienced it, so we've passed on to our customers.
Right. Sir, so I think in 3Q also you had highlighted that we might play this pricing strategy related tweak because so that we can gain momentum in the market in terms of, let's say, growth being better than what we saw in the earlier quarters. So is it in the same direction that we are sort of moving in, right?
Yeah. So in Q2, the earnings call, we had said that there is one large 2,500, 3,000 crore of term loan where we are yet to receive that 50 basis rate benefit. And once it comes, there is definitely a scope to pass on 10 basis points to the customers. So that happened at the end of October or thereabouts. So basically, we were in a position to take it in the November algo and pass it on to 1st of December. So that's what we did. And and this time we've not had that problem. We had the benefit of the 25 basis points coming through quickly. So from 1st of January, we've done that. Of course, there is a bit of a pressure which is quite evident in the loan closures and BT out and everything. So obviously, this would help. But obviously, as stated last quarter, we would still want to at least maintain our spread, and we will not compromise on the spread and NIMs below this. So that's the strategy at least.
Right. So the second question was on the NHB funding side. So that, of course, had been falling because I think the rates there were not so lucrative. So incrementally, what is the kind of rate that you are seeing being offered by the NHB borrowing?
I think you're talking about NHB borrowing. So NHB, our blended rate that we are getting, at which we are getting the refinance is 6.3. It is very comfortable.
Okay.
But why we did not pick up the entire 1,000 or 500 crores is because first of all, of course, there was, we don't maintain any treasury book where we can keep the surplus funds. So whatever funds we are raising, we are utilizing it for either prepayment of borrowings or for, lending for loans. In this case, the other thing was that, first of all, we required less amount of funds. Second thing is that, we had other committed lines of disbursement from banks. We still hold close to 4,000 crores of undisbursed, unutilized bank sanction limits. So that is still there. But other thing is that, in Q4, normally the rates are at an elevated level. So basically, other thing or thought process was that if we can, take 1,000 crore and keep it for Q4, then it will help us in meeting our entire requirement, and we will not be compelled to go to the market and raise at a higher cost. So, as a pricing strategy also, we decided to postpone or take that 1,000 crore in Q4. And this quarter will definitely be availing the full 1,000 crore of the sanction. So that should also help us.
Got it, sir. Got it. Sir. Thank you so much for answering my questions. I'll come in the queue, sir.
The next question is from Sonal. Sonal, please ask your question. Please introduce yourself and ask your question.
Hi, sir. This is Sonal Minhas from Prescient Capital. Thanks for taking my question. I hope I'm audible. Sure. Thank you, sir. I was just trying to extrapolate the numbers for the year end, and it looks like I think the year-end book growth would be close to 10, 11-ish, thereabouts, as we close the year. I understand, I think you'd given a guidance around 15% little while back. Looking for the next year, basically, given that the software stack will be done by Q4, and the tech platform would be ready, so would the other systems. Are we equipped to actually see a higher growth or closer to your longer term average growth for FY27, 28? That's my first question.
Yeah, sure. See, you are right. We may not be 10%. It will definitely be higher than that. As I mentioned earlier, we are looking at around 3,100 to 3,300 crore of disbursement in this quarter. Frankly speaking, we had in the beginning of the year, if you see our data, in the previous year, our normal prepayments every quarter, closures and everything put together, amortization and everything, was around 1,350 to 1,380 every quarter. So we had actually planned keeping in mind 1,400 to 1,450 in a quarter-wise we had planned it. But the last 2 quarters, our prepayments have been higher. So about 400 crore worth of AUM growth has been impacted. Had this been at the rate at which we had anticipated, we would probably have been around 41,100 to 41,200 kind of a range in terms of our AUM by the end of this quarter. But yes, about 400 crores has been impacted because of the higher prepayments. And in Q4 also, if with 3,200 crore disbursements, assuming the same level of 1,700, we expect about 1,500 is the net addition to the book. So we should end somewhere around 42,000 plus kind of a thing for our so that will be around 11% to between 11 and 12% is what we anticipate in terms of our AUM growth, which is yes lower. We had indicated that 12 to 13% or somewhere in that range between 12 and 13 is where we will end up for this year. Next year onwards, we had projected for 15%, not this year. So we will be probably around anywhere up to, because 400 crores we've lost, that is about 1 percentage point in terms of because we were 38,200 crores at the beginning of the year. So 400 crores is 1% we have lost because of the higher prepayments in terms of our AUM growth. So that is correct. But next year we are looking at about 13,500 crores, and considering 1,700 crores every quarter as a prepayment or thereabouts. So 13,500 crore and 7,000 crore prepayment amortization BT out should give us around 6,500 crore of addition to the book. That is what is the plan for next financial year, which should be around close to 15%, assuming we are at 42,000 crore this year.
Got it, sir. Sir, a follow-up question just to understand the nuance of how the BT out and the prepayment works. And this is a theoretical scenario, just trying to understand that if we would have reduced the rates, let's say maybe by passed on more rate cuts to the customers, would the BT outs been lower? And whom have we lost these customers to? Are these banks? Are these peers who are more aggressive? Just trying to understand the on-the-ground dynamics.
Sure. Now, I think it's a very valid point. Unfortunately, what has happened in our case is we have about 54% still of loans which are on an annual reset basis. While the rates, it helps us in terms of getting, lags, it helps us in terms of improving our NIMs and spreads. What has happened is the annual reset customers are the ones where the prepayments have been very high. So the quarterly reset customers have been very, although they constitute about 46% of the book, but the prepayments, if you look at it, less than 20% of the prepayments are happening in the quarterly reset book. So basically, it is our failure to communicate to the customers or to convert them, or the delay in converting them from annual reset to quarterly reset, which has hurt us, I believe. Because, if it was because at least when our customers do appreciate that we have passed on 50 basis points and we have regularly, this is the fourth rate cut that we are passing on to our customers. But what has happened is the annual customers don't get the entire benefit. They have to wait for that 1 year period. And we have, I believe, not pushed it. We should have done it much faster. So that is I believe the main reason why the prepayments are happening. But having said that, prepayments are mainly for two. One, obviously, is the rate point, which we could have handled this way. But the second point, of course, is that there are also customers who go for takeover plus top-up. And many times we are not in a position to offer them the same level of top-ups that they are able to get from the market. So those kind of cases we have to let go. But those are, conscious calls. But yeah, on the rate side, if we had communicated better, probably we would have been able to save some of the portfolio from moving out.
Got it. Thanks for explaining. I'll fall back to you. Thank you.
Thank you.
The next question is from Shreyans. Please unmute yourself, introduce yourself, and ask your question. Hello, Shreyans.
Shreyans, if you're unable to...
Hello.
Yeah.
Hi.
Yeah, hi. This is Shreyans Gadani from SG Securities. I had a couple of questions. One was basically looking at a long-term trend, in terms of the borrower mix. We've seen, structural increase in the self-employed, non-professional, category. Where do I don't know if this is a function of us moving out of South India or, as Northern India is, just more of that population, or, are we looking to increase that, and where do we see this stabilizing, as, a mix of our book?
Sure. It's not a function of the, geography, change in geography. In fact, if you see one of the slides, we have mentioned the 4 pillars of our Vision 2028 document, where we have said one of the things is we would like to increase our SENP book. We were almost at 73-27, 73% was salaried and 27% was self-employed. By FY28, we have indicated that we would like to, we are okay to take it up to 65-35. That is the thing where we have now from a 73-27, we have moved to 69-31. And by FY28, we are okay to move it to 65-35. It's more of a conscious call. As far as geography is concerned, actually, if you look at it, our salaried percentage is highest in the north. Among all the 6 zones that we have, our north zone has the highest percentage of salaried segment. It is not that, the non-south geographies have a higher self-employed segment. But yes, within geographies also, there are pockets where self-employed is more, like if you look at, say, if you look at Rajasthan, or maybe if you look at parts of Tamil Nadu, mainly the Tirupur side and all. Yeah, there are, so it has nothing to do with the geography, but consciously we have taken a call to slightly increase our self-employed so that we can have a slight improvement in our spread. Which is visible also, because while the rates have been coming down, we have been passing on the rates. If you see, our yield has been somewhat kind of maintained at 10 was, I think, there. We were 10.14 or thereabout. It's just come down to 10.07. Basically, we have, this strategy has helped us also maintain a little bit of our yield, and it's a conscious call.
Got it. As we see this book seasoning, what kind of, NPA ratios do we expect in terms of, now versus current, for this particular?
See, we have got the, last couple of years or whatever, if you see our salaried segment, GNPA has been in the range of about 0.5 to 0.6%. Whereas self-employed category, our this thing has been range bound around the 1.6 to 1.5 to 1.7%. This is the range bound figure. Even the last 8 quarters, the numbers have kind of remained in this particular range only. Yes, to that extent, there will be a slight increase in our delinquency numbers, if you look at it. But we are confident that, we still have quite a bit of, delinquent pool in the existing pool where we can, correct and reduce those numbers. In the medium term, I don't see the numbers, and we the last so many years that we have been there, Can Fin has not seen a GNPA more than 1%. We are confident that that will not be breached. We are confident of keeping it below 1%.
Got it. Last question was on the annual reset portfolio. Assuming that, all of that resets to quarterly, what kind of NIM impact, do we expect, and what steps are we taking to, reduce this prepayment increase that we are having?
Sure. See, actually, we have factored the, future conversion from annual to quarterly when we passed on the 15 basis points to our customers. Basically, first of all, there was the December 5th repo rate cut, which we have experienced on 40% of our book. That, of course, is something which we are going to get, which takes care of this, some of this 15 bits that we have passed on. The second thing is that, as I had mentioned a little while back, that in our NHB portfolio, which is all at annual reset, we still have some portfolio which is going to, see that benefit. And NHB book, approximately 60 to 75 bits is the reduction in the PLR which they have impacted. So some of that NHB pool, we are likely to experience that also going forward in the next few months and all. So therefore, we have factored those things into it, and currently we are at 3.89% as the 9 months NIM and 2.83% as the spread for the 9 months. We expect that we should be, even after all this 15 basis points and factoring in the benefit that we are going to get, it will not go below 2.75 and the NIMs will not go below 3.75.
Got it. This is after everything converts to quarterly.
Yes.
Okay. Perfect. That's it. Thank you from my end. That's all from my end. Thank you.
The next question is from Raghav Garg. Unmute yourself, introduce yourself and ask your question. Please restrict to 2 questions per participant. Raghav, you can unmute yourself.
If Raghav, we're not able to hear you. I think you unmuted yourself, but...
Can you hear me now?
Yeah.
Okay. Hi. I'm Raghav from Ambit Capital. I have a few questions. One, I wanted to know what is your plan on branch expansion for the next 2 years, which is 27 and 28, and if you can add some geographical color to it, like which states or regions will you expand more? That's my first question. Should I ask all my questions or should I wait?
Either way, you can go ahead.
My second question is, can you highlight what is the number of marketing executives that you currently have across all of your branches? Because I think last time when you had indicated this number, it was about 100. That's in July 2025. So has it increased from there? And last question is, on your IT implementations here, I understand that you may end up taking it in next 3 to 6 months. But I just wanted to understand at a very broad level, whenever you do decide to take it, what is the number of days of operations that will be impacted before operations fully normalize? Those are my 3 questions. Thank you.
Sure. Yeah, thanks, Raghav. In terms of the branch expansion, our vision document said we plan to have about 300 branches by FY28. We are currently at 249. So next 2 years, we plan to open 25 branches. We already have identified some 20-odd locations which we are very keen to open. So we will be opening about 25 branches in the next year. If you see the branch expansion, so far most of it has been in the north and the west zones. We have not opened any branches in Karnataka and Telangana. So obviously we had some slowdown there, which was for various reasons. So basically we will continue to look at the other geographies only. Maybe we may open a couple of branches now that Karnataka has come back to its old 250 plus kind of a number. We may look at a few branches in Karnataka, but by and large it will be north, west, Tamil Nadu and east, where particularly Andhra Pradesh we are quite positive about. So these are the geographies where we'll be looking at branches. In terms of marketing executive, we had 90 as at the end of the last quarter. Currently also the numbers are the same, 1 or 2 given, 1 or 2 here and there, attrition and new joinings and all those things. So that is the status. The number was about 37 at the beginning of the year in Q1. We increased it to around 90 slowly to up to 90 in the second quarter. And in this quarter, we have continued to keep the number as the same as 90. Last quarter, if you see, our 90 people in the team. In the first quarter, we had about 101 crores of business sourced to the team with 37 people. In the second quarter, this number increased to around 185. And in this quarter, we have done more than 250 crore business has come. So almost on an average, these 90 people have done close to around 90 lakh plus kind of a sourcing per month per staff. That's the kind of sourcing that has happened. We have not added anything. But going forward, yes, we plan to at least increase some in the next financial year. And again, so by FY28, end of March 28, we at least expect to have about 250 odd people in the sales team. Their third question on the IT implementation. As I mentioned earlier, we may look at probably taking it to Q1 for the LOS, LMS part of it because it will happen now. But that is more because, if it comes closer to the March dates, then probably we may decide to either do a small pilot in this year and most of it next year or entirely the next year. But so the impact in this year may not be there. But what we expect is that the way, all our other modules have gone and also in the sense and the way, we have seen the customization aspect to it, I think, it will be about 3 to 4 days of downtime. Beyond that, I think it will be some 1 or 2 weeks for the teams to get accustomed to it, because basically, since customization is there, it's mostly the UI UX which is going to change, and some process flows will change. So, getting used to it will be some effort. Other than that, I think it should not take too long also for the branches and the staff to get accustomed to the new system. So probably, if you have to put it into numbers, I would say in the quarter in which we impact, probably about 300 crores, 250 to 300 crores of business impact would be there. I would put it in that number, that way.
That's helpful. Just one clarification. You said 200 marketing executives by when? March 27, is it?
150 by March 28. So probably this year we are at 90. We may increase it to about 150 odd next year, and another jump in the FY28.
Thanks. That's very helpful. Thank you.
The next question is from Nipun. Nipun, please unmute yourself or introduce yourself and ask your question.
Hi, sir. This is Nipun Kinka from TD Research. So basically my question is, why do you think we are underperforming as compared to the NBFC system growth of home loans?
So why we are underperforming? See, in terms of AUM, yes, we are a little, lower than the industry level, about 13 to 14%. Mainly because it's, growth this year, if you look at it, current year, disbursements have grown at 19%, which I think is comparable. But, and by the end of the year, with around 3,200, 3,300 crores, we should end up around 22-23% disbursement growth compared to last year. So in terms of disbursement, I don't think that is a major issue. But as I mentioned earlier, our AUM growth is slightly lagging. One, because, it of course comes with a lag, and it will take, maybe the next year can be a little better. And two, we have lost about 400 crores because of higher prepayments this year. But for that, our growth would have been around 11% plus in this quarter, end of this quarter. So I think these are the two things I would say we are lagging behind.
Okay. And my second question was regarding the IT implementation that we are doing, and we are currently under, it's in the phase. So what do you think would be the competitive advantage that we might have post implementation of this infrastructure?
See, in terms of our IT, our existing IT infrastructure or IT thing is quite dated. Our current IT platform is something which was implemented in the company way back in 2011. So obviously there are a lot of, in terms of the elements which were not present. The current IT that we are implementing is a wholesome thing, which is into, one is application side, second is the security features, and third is the infrastructure side. So obviously in terms of the infrastructure and security, it is going to, be very, helpful to the company in terms of, the present scenario of cyber security and cyber threats and all those things. So that's definitely something which we have taken into consideration. Infrastructure, the way we have enhanced the capacity and everything, we should be able to, definitely system will be able to match up to the higher growth levels and everything that we are planning in the next few years. As for the applications, earlier we had as I said, a dated application, plus at the same time it was only an LOS LMS. So now the new applications that we are going include document management, a lot of other deposit modules also, much enhanced FNA package, and also has things like other data vault and a lot of integrations and third-party solutions also integrated. So that way, a lot of benefits will come in the sense that a lot of activities which are presently manually being done will also get automated. Plus, the API features and everything will enable us to also quickly attach the third-party vendor solutions as and when we require it, and go-to-market time will be much lower. Plus, over a period of the last, from 2011 to 2025, a lot of things have become a little, cumbersome, the processes and all. This new system will also have a lot of simpler processes. So definitely the time of the branches will also reduce considerably. We expect at least, 20% productivity improvement in, although, we've not actually, there's no way to calculate how 20% and all those things, but at least we expect a sizable amount of reduction in a turnaround time for other key transactions and activities.
Got it. Mostly, I believe all the stuff that you just talked about, mostly it will improve in our operational side of things rather than the growth side.
Operational and security also. I think security also is something which is, not usually discussed about. But, in terms of security, we have, taken care of a lot of things, in terms of the CSIM, the SOC, NOC, even in terms of the SD-WAN solutions. So these are obviously, things which will help in the security aspect also.
Okay. Got it. Thank you.
The next question is from Yuval. Yuval, unmute yourself and introduce yourself and ask your question.
Hi, sir. This is Yuval Ayya from Nuvama. My first question was, in this quarter, borrowings from banks has gone up from 60 to 62% from 57% in the previous quarter. So could you just share the incremental cost of borrowings in Q3?
Banks, all our bank term loans are now at rates below 7%. I think 6.92 or something is our long-term borrowing cost, which is there. Of course, one or two are there where we have, they are not, yet to pass on small benefits. But other than that, 6.92 is the incremental cost of borrowing, you can say, on the higher side from banks in the Q3. Short-term borrowings obviously are even at lower at 6.4, 6.45. That's the rate at which we are borrowing from banks. So I would say probably around 6.8 or something could be the blended cost of the bank borrowings for us.
Right, sir. Got it. So, could you just provide any breakup as to, at the moment of the total funding mix, what is the share of floating rate borrowings and fixed rate borrowings? And I understand that NHPs, they have an annual reset. So the other components of the borrowing mix, what is the average time in which, you can see the repricing when it comes to floating rate borrowings?
See, in case of our bank borrowing, which you said is 62%, our 80% of that is linked to external benchmark rate, which is repo rate. So there we will immediately see the transmission of the, whether there is a reduction or an increase for that matter. That the transmission will be immediate. The remaining 20% of the bank borrowings is linked to T-bills. There also, there will be an immediate transmission, you can say. Maybe not to the exact amount. So 125 basis points will not translate into 125 basis points, but somewhat near there will be the impact on the remaining 20% also. Then we have the NHB refinance, where 50% of the NHB refinance, which is linked to the affordable housing fund, that is fixed rate. So there will not be any change in that. The remaining 50% of approximately of the NHB refinance is at floating rate, but at annual reset. So there the transmission will be in a staggered manner. NCDs are fixed rate, deposits are fixed rate. So and CPs of course are too short. So whenever they reprice, they will be as good as floating rate only. So considering the 62% bank borrowing and another 6 to 7% of NCD, I think about 65 to 70% of our borrowings are there where we will get a, within 1 month transmission on the liability side will happen.
Understood, sir. So even after your quarterly reset,
I request you to please go.
Sure. Thanks.
Next question is from Mohit. Mohit, please unmute yourself, introduce yourself, and ask your question.
Hi. Thanks for the opportunity. This is Mohit from HDFC AMC.